Well, hello everyone, great to have your company on 𝐾𝐤𝐿 TV. I'm James Preston and you're watching The Buzzing Trends, a show that looks at the emerging trends driving the market momentum. In today's show, we've got 5 ASX growth stocks to keep an eye on in the month of September. So if you are an investor willing to pay a premium on the value of the company to tap foreseeable growth opportunities, these stocks are ones that you'll want to keep an eye on. Our 5 stock picks for today are Appen, Life360, Temple & Webster, Resmed and Elmo Software. Growth stocks have always been the favourite pick of investors who are willing to pay a premium to tap foreseeable growth opportunities. Generally, these stocks are expected to grow above the industry's average growth rate, hence they often trade at a premium. However, unlike value stocks, growth stocks generally have a smaller margin of safety, as investors almost always buy them above their fair value in anticipation of higher growth. So on that note, let's have a look at 5 ASX growth stocks for September. The first ASX growth share on our list is Appen, a $1.56 billion data services company. The company is moving towards a new organisational structure which is aligned to its product-led and customer-centric strategy. The prestigious customer base of the company includes tech giants such as Google and Facebook, and whilst the demand for the company's services took a hit during the COVID-19 pandemic, the company has been recovering strongly. As a side note, technology firm Appen was today's top loser in the list, falling over 15% on the back of a disappointing earnings figures outlook. The profit more than halved to $6.7 million during the first half of the year as customers allocated resources to new non-advertising projects. The revenue dropped 2% to $196.6 million. It also declared an interim dividend of 4.5 cents a share, in line with its interim dividend paid a year ago. Moving on to another IT company on our list in the form of Life360. The company helps to bring families together by providing communication through its Life360 app. The company is also in talks to acquire Jiobit, the provider of wearable location devices for both people and pets. In the quarter ending 30th of June 2021, the company reported a 4.2 million increase in the global monthly active user database. Data revenue for the reported period was in line with the March 2021 quarter, with a modest year-on-year increase. On that note, it's time for a very short break on the Buzzing Trends. We'll be back with more growth opportunity stocks on 𝐾𝐿 TV in just a moment.
Tune in to stay updated while on the move.
We will tell you where the crypto craze has reached,
Where the property market is headed next.
what the world is doing to become more environmentally friendly.
Apart from tracking the daily market charter.
Be on top of the latest news and announcements
With 𝐾𝐿 TV.
Welcome back. Great to have your company on the Buzzing Trends exclusive to 𝐾𝐿 TV. And today we're discussing ASX listed growth stocks for the month of September. Let's move on to our third stock, Temple & Webster Group. Temple & Webster Group is an online furniture and homewares retailer. The company clocked a high revenue growth of 85% in the 2021 financial year. The growth trajectory seems to be decent as the company performed well even during tough times. The primary reason for Temple & Webster's improved performance is a sharp increase in the online penetration rates. Next up is Resmed. This is a medical device manufacturer with an extensive focus on the sleep treatment market. The company has been growing at a solid rate owing to successful acquisitions, wide distribution network and industry-leading products. However, these strengths would not have been particularly effective had there been no growth in sleeping disorders, which is in turn opening up new opportunities for the company. Gradually, Resmed is also gaining market share and will look to strongly cater its offerings to the sleep disorder treatment market. And our last strong growth stock to check is Elmo Software. The company provides a software platform for HR functions and payroll. It's been growing at a good pace and even performing well during the COVID-19 pandemic. The software allows small and large businesses to simplify and efficiently perform all HR-related tasks with ease. In the 2021 fiscal year, Elmo Software clocked a 52% jump in the average recurring revenue. The management is expecting a stronger growth in financial year 2022 as well. And to sum it all up, investing in growth stocks could be lucrative over the long term and even short term on occasion. However, investing in growth stocks is not a risk-free strategy. To tap foreseeable growth and market opportunities, investors often need to buy slightly expensive shares, which reduces the margin of safety. And in case of the company falling short of expectations, these shares could change direction in the blink of an eye. Therefore, while investing in them, proper risk management should not be ignored. Alright, well that's it for today's Buzzing Trend Show. Hope you found it informative. Make sure to keep it locked on 𝐊𝐴𝐿 TV for more industry insights and the latest news from the world of finance and business. I'm James Preston, signing off for 𝐊𝐴𝐿 TV.